A very good morning to all of you, and a happy Independence Day for those who are Indians or are in India. Today, as usual, this is RN Bhaskar from BKBB, an acronym for Bhaskar Ki Business Baatein. This is a channel that comes here every week with policy analysis, conversations, and occasionally a business story. But at 8:15 in the morning, right now, we bring to you news behind the news on every workday, Monday to Friday. And we're delighted that you're here with us. And as usual, we pick up headlines. And my co anchors today are Katya. Welcome, Katya. Aparna. Welcome, Aparna. And Husaina. And the three of them are going to discuss some very interesting stories. The first is about UPI. The second is about India's Independence Day gift. S&P upgrades India. And the third is about the diamond markets, the Surat market, where the cut is sharp and the glitter, the sparkle is fading. Let's take the first story, and that's Katya. Katya, could we have you?
So very first time ever UPI has released the merchant categories by volume. It's very well expected online on expected lines. Groceries and supermarket take away the highest number of volume. Then come fast foods and fast food restaurants in particular. Then other restaurants. So restauranting is taking away a lot of it. Then come telecom services and then other services. So this is how the breakdown is. But one interesting point that very few people have mentioned is that while cumulative transaction volume of groceries is very high, debt collection agencies also have received the largest transaction values, which is at around 93,800 something crores. So they also make up for 12.7% of the cumulative merchant transaction value. It's not volume, in terms of value. 12% of this money is going to debt collection agencies, and that is a very uncomfortable number for any economy. Also, in terms of and the average transaction value of debt collection agency is also very high. It is around 5,800. So it is a very interesting and uncomfortable number, sir. What do you think about it? What does it tell about how much we are indebted as a country? Of course, we can check the trends little later, but why is the fact that 12% of the transaction value is going to, which means UPI is easy to pay, so debt collection agencies might be focusing on that, and it is not getting cut from salaries. So this is not bad. They are not bank loans either, because banks generally have a different route. So UPI is means a little bit of unorganized or app level of indebtedness is coming in. So does that make you a little scary about the state of the economy?
I'm not sure whether it's scary about the rate of economy. What I'm scared about is the over dependence on UPI. And UPI
Right,
has been very successful because it does not charge merchant fees,
right.
the way credit cards do, the way debit cards do. So even small shopkeepers prefer the UPI route and not the credit card route.
Right,
Doctors have started taking UPI rather than credit cards. They say
right.
cash or UPI, no credit cards. Now, when debt collection takes place, of course, they're happy with it because there's nothing cut out, there's no merchant fees, and it's immediate. You get a confirmation immediately. So there's
Right.
no, the check is in the pipeline. So you can present the check. No, pay by UPI right now.
Okay, yeah.
So it's an immediate transaction. It's safer to collect money by UPI than through checks. Now the danger is that once UPI decides to charge merchant fees, you'll see the picture changing. Let's see.
Okay.
But very
Let's see.
interesting, very interesting. The numbers that you get are extremely interesting, especially debt collection. I didn't
Right, sir.
expect debt collection to be that high, but yes, thank you very much.
Right.
And that takes me to the second story. And the second story is about India's Independence Day gift. Could we have you, Aparna?
Yes, sir. Sir, after 18 years, India has secured its first sovereign rating upgrade from S&P Global Ratings, moving from BBB to a higher BBB. This shift lifts the country one notch above S&P's lowest investment grade. The upgrade reflects India's economic resilience, fiscal consolidation, and policies to keep inflation in check. S&P credited key reforms including the goods and service tax, bankruptcy code, the stable monetary policy framework. The finance minister highlighted India's focus on fiscal discipline, infrastructure growth, and inclusive development as major factors behind the decision. A stronger rating means India could access global funds at cheaper and more predictable rates, benefiting both the government and private sectors. S&P noted India's robust post-pandemic growth, outperforming many global economies while maintaining steady and fiscal consolidation. The upgrade offers a rare boost for the economy, even as it faces global tariff challenges and a turbulent world trade environment. Now, economists suggest that the upgrade could also attract more foreign investment into India's equity and bond markets, as higher credit ratings often reassure global investors about a country's stability. This influx of capital found could further strengthen the rupee, support job creation, and accelerate development projects across key sectors. Sir, what do you think about this?
Yes, we've got a higher rating. Couldn't have come at a better time than today. But I just wonder what was the factor that made the ratings go higher. There are reports that it was because India's on the reform path, maybe. But if there's a reform path, why is the trade balance worsening? If there's a reform path, why is the consumption demand slowing down? And why is the rupee weakening? Weakening against a weakening dollar. So there are worrisome signs, and while there have been some reforms, major reforms have not taken place. Yes, there's a reform on the tax side. Yes, there's a reform on the court side to some extent, but many other things need to be done. And we have to diversify our markets away from the West to ASEAN, to Asia, to the South, to the world in the South. Let's see. But it's good news for India. India should be congratulated on this development. Thanks very much. And we'll go to the third story, which is on diamonds. And could we have you, Hussaina?
Yes, sir. So, Surat, which is the world's hub for diamond finishing, is facing its third major crisis in 17 years after the 2008 global financial meltdown and the pandemic. Now, the trigger this time is, of course, the United States reciprocal tariffs on gems and jewelry, which will come into effect on August 27th. Now, this move will raise the effective duty on Indian exports to 55%, making them significantly less competitive in the US, which is again India's largest diamond market. Now, the impact is severe because Surat's diamond industry employs around 8 lakh artisans across 5,000 units, polishing 9 out of every 10 diamonds globally. Already, production has been slashed by 30 to 40%, putting at least 50,000 jobs at risk. Exporters report shrinking US orders, and one of the manufacturers also said that production plunged from 100 carats a day to just 70, with demand expected to worsen. Now, the situation is worsened again by a growing preference in the US for lab grown diamonds, which are cheaper than usual natural stones. Now, while these synthetic diamonds could keep polishing units busy, they also push natural stones into an even higher price bracket, narrowing the customer base further. Globally, India's gems and jewelry exports in financial year 25 amounted to $28.67 billion, which let me tell you was is 11.21% lower than last year, which was around $32 billion, with sharp declines in markets like the UAE and Hong Kong. Merchants are now exploring newer markets in the Gulf, Europe, and Australia. But again, industry leaders stress that this is not feasible owing to the added cost and the fear of an additional ad valorem on the item. If tariffs remain and demand continues to contract, Surat's artisans, which by the way are the backbone of the trade, face months of joblessness. That said, The industry still says that India will continue to be the preferred hub for diamond polishing because of its skill base and manpower. What do you think, sir? Do you think that India will still be the preferred hub for diamond industry?
I think India will remain the preferred hub for the diamond industry for the simple reason that our costs are lower and our skill sets are very high. Today, India cuts 9 out of 10 diamonds, an industry estimate, in the world. Of course, the value of our diamonds is a little lower than the value of the diamonds cut in, let's say, New York or in Belgium or elsewhere. But what has hurt the diamond industry is Surat. Surat was promoted by the Prime Minister Modi when he was the Chief Minister of Gujarat. Since all the diamonds were cut and polished in Surat, they thought that Surat should also start marketing diamonds. Marketing is not such an easy thing. But Surat embraced marketing, and the Prime Minister helped, when he became Prime Minister, he helped set up a diamond bourse over there. Most of them specialized in lab grown diamonds or LGDs or synthetic diamonds. What the Beers did was it slashed the price of diamonds and crashed the price to less than $1 a carat. And so all the Surat diamond merchants who were largely into LGDs suddenly found that the amount of money they could earn had crashed and there was no money left. So that is why the production slowed down. They work 4 days a week and 4 hours on those days because there's no demand. Now, will they be able to come up? Yes, you need marketing savvy. And that is what the Bombay diamond players have. Once again, Bombay and Surat will have to work together and not become competitors. But yes, diamonds are hurting India, especially because of Surat, especially because of the Beer's marketing policies. And India will have to find out a way to continue doing this. But thanks. It's a very interesting story, a very interesting, important industry for this country. And that takes us to the end of today's session. But before I go on to comments and questions that are coming in, I would like to remind everyone that you should click the subscribe button if you're not a subscriber already. Click the like button. That is very helpful. And the third one is please tell all your friends about us. It's the only way we can grow faster. And that takes me to the questions. First question, will Surat bounce back? Yes, it can. Surat has resilience and Surat has very low costs. And because it has low costs, it can survive. Now, it only depends on how it changes its product mix to make sure that it does not overcommit people, does not overcommit to the workers also that will give you this much of salary because work has slowed down. Let's see. But Surat has the resilience. There's a second question about UPI. Will government's UPI continue to grow the way it has in the past? Katya?
Do you mean if the charges are applied?
If the charge is not applied, yes, it'll grow. But if the charge is applied,
Charges are applied. We have heard the Home Credit had done a whole lower middle class survey. All of them said that if charges are applied, they're going to go back. We've already seen instances on social media where people are insisting to be paid in cash, especially rents of PGs, or even particular shops are also saying only cash, no UPI, and it will work. Nobody will not go to a shop because it's asking only for cash. And I think it's easily reversible also. It's a habit that's very easily reversible. So if the charge is applied, it's coming. There's also already a lot of anger about taxes and direct and indirect. So paying income tax, every time you're spending, you're paying GST on almost all the products. And then again, there is a charge on the convenience that you pushed on. Government has pushed for UPI onto our heads. And so that'll cause a huge backlash, sir.
in fact, there's one more fear that people have. The small Kirana wala who gets his chai payment in UPI, through UPI,
Mm.
A student does not pay tax.
Mm.
Tomorrow, the tax authorities will just total up all the UPI transactions for him and ask him to pay tax, and he will say no UPI payments anymore.
Right.
That is a danger which is always there.
Totally.
Anyway, let's go to the third question. And the third question is about uh, the S&P ratings. Does that rating means that India can grow, can the economy will boom? Well, the rating is just one indicator. The rating does not change the fact that you are yet uncompetitive in the export markets, that you have not changed your domestic policies to galvanize investments and hence jobs and hence purchasing power. Till you do that, ratings are just a number. It's good to have it, but let's see.
If I
Eh,
may add,
yeah.
Pakistan's rating was also upgraded by Moody's very recently, just
Thank
because
you.
they received a loan. I think a lot of them are politically motivated rather than
Thank you very
economic.
much. Thank you very much. That's also good. What you want, enlightening factor. And that, in a way, takes me to the end of today's session. Today's the last day of the week. Have a nice weekend ahead. Refresh yourself and do tune in once again on Monday, where we'll bring to you more news behind the news. As for today, have a great day. Celebrate independence. Do whatever you want, but come back again on Monday morning. Good luck. All the best.